Hey everyone! I often get asked, how do you invest your money? And while that's a valid question, it's not necessarily the right one for most of you. See, I'm at a point where I'm investing millions, but I know that many of you are just starting out, so the strategies I use today won't apply to your situation. However, I know you're curious, and I find this topic fascinating. That's why today, I'll show you how I would invest if I had just $1,000, if I weren't a multi-millionaire yet. Stick around, because by the end of this video, you'll have a roadmap to potentially turn that $1,000 into $10,000s or even $100,000 within 365 days. I know that's a bold claim, but let me walk you through it step by step. Let's dive in. Offense versus defense, the two types of investing. First off, it's crucial to understand the two main types of investing, offensive and defensive. You can think of it like a football game. If you're down, you go on the offensive, taking risks to score quickly. This is the same in investing. When you're broke, you need to go on offense. Your goal is to reach your first financial milestones, whether that's 6 or 7 figures. Once you've hit those milestones, then you switch to defense. The objective is to protect what you've earned, ensuring your money works for you without losing it. So if you're just starting out, you need to focus on offense. Investing defensively when you have nothing to protect, that's how people stay stuck. This is why most people never get rich. The truth about defensive investing. Now, don't get me wrong, defensive investing has its place. Once you've built up wealth, you'll want to diversify, invest in bonds, or keep your money safe in various funds. But the reason these investments pay off is because you already have money to invest. For instance, the returns from bonds or the S&P 500 are impressive, but only if you're working with a large sum of money. If you're starting out with just $1,000, investing it defensively won't get you anywhere near your financial goals quickly. Investing small amounts in the stock market, while a good habit to form, won't move the needle in any significant way. You won't get rich from defensive investing alone, building your investing muscle. However, it's still essential to build what I call your investing muscle. Even if you're only investing $10 a day, the point is to develop the habit. You need to get comfortable with putting your money to work. One of my biggest regrets is that I didn't take investing seriously until I was already earning millions. Had I started earlier, even with small amounts, I would have developed my investing skills much sooner, and the process wouldn't have seemed so daunting. So, my advice is this: start investing now, even in small amounts, just to develop the habit. You're not trying to make money at this stage, you're learning the ropes. Why offense is key for beginners. Let's get real for a moment. If you had invested $1,000 in the S&P 500 5 years ago, you'd have about $1,700 today. That's a 70% return, which is fantastic, but it's not life-changing, especially when you're just starting out. You won't achieve financial freedom by slowly growing small investments in defensive assets. Rich people diversify their wealth after they've made their money, not before. They didn't get rich by diversifying, they got rich by going all in on one thing. Once they reached a certain level of wealth, they spread their investments around to protect it. For those of you starting out, you need to go on the offensive, not defensive. Trying to diversify too early or make long-term plays with small amounts of money will take too long to make any meaningful impact on your financial situation. Offensive investing, taking action. Now that we've established that you need to go on the offensive, let's talk about what that actually means. Offensive investing requires action. And no, I'm not talking about buying into the latest meme coin and hoping for a quick windfall. This is about putting in the work. The good news is that while offensive investing isn't easy, it's highly effective. You don't need to predict stock market trends or gamble on volatile markets. All you need is to invest in yourself. And that's where self-education comes in. The power of self-education. Here's where things get exciting. If you take that $1,000 and invest it in self-education, you can learn high-income skills that will allow you to make thousands of dollars quickly. We teach these skills inside my platform, Digital Launchpad, but there are countless other ways to gain knowledge. You can learn a profitable skill and start selling it almost immediately. Unlike investing $1,000 in the stock market and hoping for incremental gains, self-education can lead to exponential growth in your income in a short period of time. We have students who've invested $37 in their education and now earn over $10,000 a month. That's the power of investing in yourself. Skill stacking, the shortcut to success. Let me break it down further. Think of self-education as skill stacking. You start by learning one high-income skill, like copywriting or digital marketing. That skill alone could take you from earning $20,000 a year to $70,000 a year. But it doesn't stop there. Then, you learn how to manage a team, which could push your income to $140,000 a year. Next, you add systems and client acquisition to your toolbox, and now you're earning $280,000 a year. Keep stacking those skills, like content creation or personal branding, and soon you're making $1 million a year. Each new skill compounds the effects of the others, just like compounding interest in investing. The difference is, with skill stacking, the compounding happens fast, within months, not years. Compounding skills versus compounding interest. People often talk about the magic of compounding interest in investments, and it's true. Over time, investing a small amount consistently will grow into a large sum. But time is the key factor here. It takes years, sometimes decades, for that compounding effect to really take off. With skill stacking, you can achieve the same exponential growth in a fraction of the time. Instead of waiting for years for your investment portfolio to double, you can double your income in a matter of months by adding new skills to your arsenal. When to shift to defensive investing. Once you've built up a solid income through offensive investing, then it's time to shift to defense. Once you're earning 6 or 7 figures, you can start putting your money into long-term, safer investments. But until then, your primary focus should be on growing your wealth aggressively through offensive tactics like skill stacking and self-education. Conclusion: invest in yourself first. To wrap it up, I want you to understand this. The best investment you can make is in yourself. Sure, I want you to buy property, invest in the stock market, and diversify when the time was right. But none of that will be as valuable as the skills and knowledge you acquire through self-education. Remember, you are your own most valuable asset. Investing in yourself will pay off faster and more significantly than any other investment you can make. I'm rooting for you, and I'm excited to see what you achieve. Take action, invest in yourself, and watch your life change. Thanks for watching.